gold moves first and then Bitcoin catches up. So I think that there is going to be the network value of gold just went up by a lot. And so let's say gold settles at 5,000. That puts fair value of Bitcoin, like 1.6 to 2 million if it matches gold's network value. So I think it's actually helping.
That many quant-based funds have short time horizons, 6 weeks, say. By contrast, retail investors or crypto believers often take decades-long views. Lee suggests that this longer horizon may offer an advantage in crypto, which is characterized by high volatility but long-term growth potential. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
Crypto is full of experimentation, but then once in a while, a handful of these companies break out into the mainstream, and they've turned out to be better businesses. Stablecoin is an example. A tokenized dollar functions better than the US dollar right now. Exhibit A on companies is Tether, because Tether today has only 150 employees that have been there more than 12 months. I think they might have more than that now. But they're valued currently, according to the media, $500 billion, $3.3 billion per tenured employee. And they earned $20 billion, which would make them a top 10 most profitable bank. At $500 billion, they're second only to JPMorgan, which is valued at $869 billion. JPMorgan has 313,000 employees. Okay, so JPMorgan's valued at 2.8 million per employee. Tether's valued at 3.3 billion, and they're making more money than every bank in the world, and twice as valuable as Goldman. That's a breakout. Polymarket as a prediction market functions far better than the CME, but the real breakout was the 2024 election. The prediction market for Polymarket called 50 of 50 states correct. Nate Silver's model, New York Times, none of these models were even close. Only Polymarket called the election in 50 of 50 states. And as we just mentioned, Trueflation, to me, and I've watched its correlation to yields and spreads and even the curve, it's a better predictor of how markets are reacting. So Trueflation, which is a blockchain-based inflation tool, works better than CPI. And Trueflation comes out every day. So the first theory I would point out is that if you have a room of geniuses, then the average person's a genius. Or the best you can do is to be average. So if every hedge fund employs expensive tools, buys alternative data, but from the same vendors, they're all going to have the same conclusion because they all were geniuses and get an average result, which means there's no edge. The second explanation is that alpha is a finite source. And in the past, hedge funds took alpha from retail. And that's like why hedge funds did so well from like the 1980s through the mid 2000s. But now the hedge funds are stealing alpha from each other. So the net result is average results. And the reason they're stealing alpha from each other is that they all employ the same time frame. Retail actually operates more like permanent capital, right? They're discounting the future. A lot of our quant-based clients, 6 weeks is the outer limit of their time horizon. But how can anyone really decipher signal from noise 6 months forward? It's really difficult. Like that's why anyone who's a Bitcoiner thinks decades ahead, and then they just ride through the volatility. That volatility is not what hedge funds can endure. This gold probably is going up. And at Fundstrat, we don't do commodities. I kind of regret not recommending gold because it's been so great. I mean, because generally, I like to be helping our clients be involved with things that are going up. So I think gold's move is like
a good strategy.
Yeah, exactly. I don't want to fight it. And like,
what kind of business do you have? I help our clients' portfolios go up.
Yeah. So gold's been amazing. I think what's really stood out is that you can explain gold's move by just pure technicals. Like I was talking to our technician, Mark Newton, yesterday, and he says that gold had a cup and handle pattern that the breakout was July of this year. And so the measured move should have taken it up to where it is now. But let's say price leads fundamentals. I think that July is also the time that the stablecoin industry started printing a lot more creations. And as you know, there's been gold stablecoins and dollar-based stablecoins, but a lot of the dollar-based stablecoin issuers are over-collateralized. So I think the stablecoin industry has been printing a lot of dollars, they're over-collateralized, and I think they've been buying a lot of gold. So I think that the stablecoin industry has been the newest bid for gold.
More so than even like a China central bank?
Yeah, because they've already been present. The central banks have been present for some time, but there's somebody new buying gold on top of the retail buying gold. And I think that would be my guess. Because, you know, like I've now there's like 7 or 8 gold stable coins. Plus, you know, there's big stablecoin issuers. And so that could be the bid to gold. Now, does that mean gold is unlimited on the upside? I don't know. I mean, I'm not studying it, so I don't know. But I think it's very bullish for Bitcoin and Ethereum because...
Why?
Well, gold moves first and then Bitcoin catches up. So I think that there is going to be the network value of gold just went up by a lot. And so let's say gold settles at 5,000. That puts fair value of Bitcoin, you know, like 1.6 to 2 million if it matches gold's network value. So I think it's actually helping Bitcoin's future terminal price. I mean, I can see that in 5 years for Bitcoin. So I think
5 years.
Yeah. I think
That'd
Bitcoin, I think Bitcoin doesn't get capped by gold. It actually gets pulled up by gold.
In his thesis, if gold's network value rises, then Bitcoin's fair value as a digital gold could be pulled upward too. He estimates that if gold settles at, say, $5,000, presumably in some scale or fair value sense, then Bitcoin's fair value could be in the $1.6 to $2 million range within 5 years.
Bitcoin makes its move in 10 days a year. So are Bitcoin's best days in the fourth quarter? Probably, because we have catalysts, the Fed's easing. We have a shutdown that's been risk off. We have China-US tensions that, look, every time there's a headline on China, like Bitcoin takes a gut punch, right? Because it is money flows and deleveraging. So that goes away. We have seasonality that favors stocks moving up, and stocks moving helps Bitcoin. So to me, the chances of Bitcoin having a huge fourth quarter are really high. And not all of these would be tailwinds for gold. So I wouldn't count. I still think it's possible for Bitcoin to hit 200,000 by the end of the year. Most of the crypto people I speak to expect a 4-year cycle. And they're adamant, that maybe Bitcoin peaks early next year. But as you know, when something is so strongly held, it's very unlikely to be true. So either Bitcoin's already peaked or we have a longer cycle. I'm more in the camp that it's a longer cycle. I'm sure there'll be 50% drawdowns because the stock market has more frequent 25% drawdowns. I mean, that's when, even though people realize, the stock market's made a lot of progress last 6 years, we've had an unusually large number of 25% drawdowns. And we probably have another S&P decline of 20% next year. So if the S&P is down 20, Bitcoin could be down 40. And actually what I've noticed, and it's not true of but I've met some crypto skilled traders, and a percentage of them are exceptional equity traders.
Interesting.
They've become so good at the EQ of like market moves that they're great at stocks. Not every crypto trader, because a lot of crypto traders are just, degens, but so it really does cross over. I think being good at stock investing is not a skill that's learned at Harvard. Some people are just really good at it.
The 4-year cycle. For Bitcoin, historically tied to its halvings, he asks, does the institutional participation and the ETF era break the old 4-year cycle? He suggests that perhaps the cycle is longer now, but he also expects that major drawdowns, 50% or more, will still occur, even if the cycle length changes.
I can empirically show it's the most hated. One of the best measures of large investor sentiment is the AAII Net Bulls Index, bulls less bears, because it's been run for 40 years. This year, it's averaged minus 11.7. So every week, the weeks through this year. There's only 3 other times in the last 40 years it's registered negative 11.7. 1990 or more, 1990, 2008, and 2022. All were bear market years. So sentiment reads as if we're in a bear market and the market's up 15% year to date. Why is it the most hated? I think we show this in our research that it's based on political divide. So the country is 50-50 Republican Democratic. But in the stock market world, and there's Pew Research data on this, 57% of professional money managers are Democratic. 66% of hedge funds are Democratic, and something like 69% of venture capital funds are Democratic.
Interesting.
So the risk capital world didn't vote for Trump. So they view his policies as that of someone who is destabilizing to the economy. In the bond market, it flips. 80% of credit managers are Republican. So that's why this year the bond market hasn't been, high yield spreads have been stable, credit spreads have been stable, but the stock market's been volatile. Economists have said, oh, tariffs are going to cause a recession, or tariffs are going to cause an inflation surge. That is actually a very subjective argument, because tariffs are a tax. And if we treat it as a tax, taxes are not inflationary. So we'd never say it's inflationary. But the economists who are portraying it as inflation I think they're taking a specific view that makes it an inflation argument. Mm-hmm. So in other words, there's some sort of bias in that statement.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.